at terminal or steady state, perhaps the way to think about Bitcoin increasing in value is not in relationship to GDP growth, which is a measure of flows, but in capital stock growth, which is a measure of stock. So in thinking about if you take all of the world's capital assets and you denominate that in Bitcoin, however much those capital assets increase over time, that's going to be the sort of rate of growth of Bitcoin. Let's just say for the sake of sakes, that's 4%. Maybe it's 2%, maybe it's 10%, whatever. It's some percentage. And that will change over time as well based on technology. But if we say it's 4% in that new Bitcoin standard world, the new hurdle rate is 4%. So if I'm the carpenter or whatever I am, and I'm doing an honest job and I'm stacking, my Bitcoin, then
I like how you said that.
I know my audience. I'm stacking my Bitcoin.
Get punched from the side.
Exactly. I've caved to peer pressure here. Then I know that whatever I use that money for, I need to credibly believe I'm going to clear 4% return, because just the instrument and the capital instrument in which I'm saving is 4%. And so I think in that world, you're going to have a lot less debt, and the debt that does exist, it needs to have a really, really compelling use case that's going to pay back higher. And so I think you're going to see a lot more equity, which is shared upside in project that you believe could do better. And so I think what ends up shifting over time is you're going to see, the quality of projects that get undertaken or experiments that get run is going to be naturally higher because there's going to be less just like crazy money out there. But I think you're also going to see a lot more in general, just like everything turns equity or as much as possible, because in that world, you're sharing both upside and downside. Whereas in the current world, in the debt world, someone is trading that upside for perceived clarity or perceived certainty in what they're going to get. But obviously that perceived certainty is kind of like hand waved away because it's monopoly money. So yeah, I think we're just going to see a lot more equity. And to your point, if I'm investing in your company, and this is what I think about all the time, and even for my fund, right? Because I have LPs ask me all the time, like, are you going to beat the Bitcoin hurdle rate? And the short answer is, I don't know. I mean, beating the Bitcoin hurdle rate, if we think it's going to grow many orders of magnitude for an entire fund, it's a very tricky enterprise. I actually don't think hardly any asset class or any venture capital fund is going to beat that over time. There will be exceptions, but to have that exception, and this is kind of what I explained to people. One, everyone's already kind of on board with the thesis. So they're already, sort of down for the cause, which is good. It increases the holding of stacks. There's a lot of reasons to do it, but is that we still have that outlier potential of, okay, if everything converts to a Bitcoin standard, there will be new Googles and there will be new really, really large companies built. And if we hit one of those, then we can outperform. But it's a much higher bar. You have to really believe this thing could get very successful.